Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Oh, and this one's a real doozy, involving preferred stock and some rather interesting amendments. Before we dive in, if you like getting straight, no-nonsense insights from company reports, make sure you're subscribed. You can also join our growing community on Discord. The link is in the description below. So today we're re-looking at a Form 8K filing from Boxlight Corporation. Now, an 8K is like a Company S urgent bulletin board. It is filed when specific important events happen that shareholders need to know about right away, not just when they get their quarterly or annual reports. This filing is all about some significant changes to their preferred stock. Let's get straight to the meat of it. On the 1st of October 2025, Boxlight Corporation made a big agreement with the holders of its Series B and Series C preferred stock. This is the kind of stuff that can really reshape a Company S financial structure. First off, the holders of Series C preferred stock decided to convert all of their shares into common stock. We were talking about over 1.3 million shares of Series C being traded in for about 199,000 shares of regular common stock. This usually happens when the common stock is doing well enough that it is more attractive than the preferred shares, or there are other incentives to make that switch. Now, the Series B preferred stockholders also made some pretty big concessions. They gave up their right to convert their Series B shares into common stock whenever they wanted. They also gave up a provision where their shares would automatically convert if the common stock price on the Nasdaq hit a certain mark. Even more significantly, they gave up their ability to force the company to buy back their Series B shares. These are some powerful rights that were essentially handed back to the company. Think of it like tenants giving up their right to demand a rent reduction or to move out early. But it wasn't T or one-sided. The company sweetened the deal for Series B holders by adjusting the dividends. The dividend rate on Series B preferred stock is going up over time. It starts at an 8% annual rate, but it will gradually increase, reaching 12% by October 2030 and staying there. This means the company will have to pay more in dividends in the future to these specific shareholders. It is like getting a raise, but only after a few years. Now, here is a crucial part about those dividends. They are cumulative, meaning if they aren't T-paid, they pile up, but they are only actually paid when the company declares them, or if the company goes through a liquidation, meaning it is being sold off or shut down. And importantly, the common stock, which includes your typical shares you might buy, cannot receive any dividends unless all these piled. Up Series B dividends are paid first, plus any unpaid dividends will start racking up 12% interest. This really highlights the priority of Series B preferred stockholders. Here is another significant point. The company has agreed to use up to 20% of the money it raises from future stock sales to buy back the Series B stock. They'll be paying $10 per S-share for these buybacks until all Series B shares are gone. This is a commitment to reduce that preferred stock obligation over time, but it is tied to how much capital they raise from new stock offerings. It's a planned exit strategy for the Series B holders and a way for Boxlight to clean up its capital structure. To make all these Series B changes official, Boxlight filed an amendment to its official company charter with the state of Nevada. This is the official paperwork that legally confirms the new terms for the Series B preferred stock. And this amendment, filed as Exhibit 3.1, is the legal document that solidifies these changes, showing it is effective as of the 2nd of October 2025. The actual deal, the big agreement that laid out all these terms, is filed as Exhibit 10.1. This is the contract that governs the conversion of Series C and the amendments to Series B. And who signed off on this, Brian Lane, the interim chief financial officer, has putting his name on the line literally for these significant financial moves. Now, let's put on our Warren Buffett hat and look at what it all means. Boxlight is essentially cleaning up its cap table, its structure of ownership. By having the Series C holders convert to common stock, they're simplifying the ownership landscape. The big win for Boxlight here is getting the Series B holders to give up their conversion rights and redemption rights. This reduces the company's immediate financial pressures and gives them more flexibility. However, the increasing dividend rate for Series B is a long-term cost. While they're reducing preferred stock, they're increasing the dividend burden on the remainder. The company's ability to buy back Series B stock is tied to future equity offerings, so it's not a guaranteed quick fix and depends on their success in raising more capital. The fact that common stock dividends can't be paid until Series B dividends are cleared means that even if the company becomes highly profitable, common stockholders might not see payouts for a while if those Series B dividends are still pending. The risk here is that Boxlight might be sacrificing some immediate financial flexibility for long-term structural simplification. If their future capital raising efforts falter, they might be stuck with the higher Series B dividend obligations for longer than anticipated. Conversely, if they can successfully raise capital and execute the buyback, this move signifies a strong step towards a cleaner balance sheet and potentially a more focused valuation on their common stock. It's a strategic move to gain control over their financial obligations and shareholder rights. So, what is the verdict? Boxlight is making a bold move to restructure its preferred stock, shedding some financial obligations and gaining more control. It is a calculated risk, with potential upside in simplifying its capital structure, but a watchful eye needed on its ability to raise capital and manage those rising Series B dividends. Alright, that is our breakdown of Boxlight Corporation's latest filing. What is your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.